Ah, Florida. It's got the beautiful beaches, the beautiful weather, no state income taxes, and an awesome governor. So the real estate market must just go up forever, right? Well, in today's video, I'm going to talk about the Q2 2021 stats on the Florida housing market, and also I'm going to give you some predictions of what I think is going to happen in the Q3 as well as Q4 of the Florida housing market. So let's go ahead and jump inside. All right, thank you guys for being here. I really appreciate it. I appreciate all the subscribers out there as well. It means a lot to me that you guys are following this channel, and hopefully you guys are getting value from this. And if you are, just tap that like button for me. It helps to promote this to other people that could utilize this information, especially pertaining to Florida real estate. Let's dive into it. So first off, I'm going to talk about, and also I'm going to leave all the links for all of these articles that I'm talking about, mainly from floridarealtors.org, so you guys can see them. But first off, I want to talk about the state of Florida's metropolitan statistical area. I'm going to talk about the areas that basically had a significant difference year over year from second quarter 2021 compared to last year's 2020 second quarter. So as you can see here, year over year change, you got 60% for Cape Coral, Fort Myers. That was a 35% year over year change. Median sales price $360,000. I'm just going to basically wrap off anything that increased over 50%. Miami-Dade, Fort Lauderdale, West Palm Beach. I'm actually in the process of selling my condo over there because I think the market is pretty high. So I do have that in contract at this point in time, and we're showing a 66% change, and the price, median sales price, up to $485,000. Now, again, this is pertaining to single-family homes. Now, if we keep going down, Naples, Immokalee, Marco Island, which is just south of me here, an astonishing 88%, with the median sales price of homes up 42% to $660,000. It is amazing, and there was a lot of cash buyers excuse me, coming into this market as well. So it's pretty astonishing, the median sales price for single family homes over in this area. 55% Northport as well as Ocala. And if we keep going down, Punta Gorda, which is just north of us, 58%, Sebastian 57%. And then if I keep going down, the Villages, which is basically a retirement community in Florida, up 120%. If we slide over here real quick to townhomes, Cape Coral, 108% for townhomes and condos, showing second quarter 3,000 closed sales, just amazing. Crestview, Fort Walton Beach, Destin area, that's up in the Panhandle, 111%. Daytona Beach area, 85%. So these are areas with just big increases for townhomes and condos. Gainesville, Homosassa, Jacksonville, Lakeland, 103%. And then you go to Miami, Fort Lauderdale, West Palm, where there is a big abundant amount of condos in that market over there, 171%, amazing. And then if you go to Naples, Florida, just south of here, 160%. These numbers are just staggering. You go down to Ocala and Orlando, 118%, 107%. Panama City Beach, a lot of condos on the market over there on the beach as well, 151%. Port St. Lucie, 111, Punta Gorda, 126, Sebastian, 101, the Villages, 141%. How long can this keep going? I definitely want to hear your comments below in terms of what your thoughts are on the real estate market. I'm going to give my thoughts toward the end of this as well. So let's jump into quarterly market summary, Q2 2021 single family homes in Florida. Now, before the last real estate recession in 2008, there were a lot of cash buyers in that market as well. And I'm seeing kind of a comparison right now in terms of people paying cash. And if you look, paid in cash, 30,000 people paid in cash in Q2 2021 compared to 2020, which was 13,000. Again, this is for single family homes throughout the entire state of Florida. You got a 24 increase across the board from the medium sales price. Average sales price, 42% increase. If we scroll down to pending sales, 12% increase. New listings, now this is, I kind of found interesting compared to QT of quarter two of 2020. You had a 24% increase in new listings from 84,000 to 104,000. So there has been an increase of inventory that came to market. However, if you go to pending inventory, it basically remained the same. Now, a big thing that I like to look at right here is this last line, month supply of inventory. It went from 2.8 months supply of inventory last year to this quarter, 1.1, and now that is just that's an unhealthy real estate market. They say statistically about 6-7 months of inventory is for a healthy real estate market. And also, you know, our artificially low interest rates are making our real estate market even more unhealthy as well, along with other things that I'm going to talk about. But 1.1 month supply of inventory is just terrible. It's terrible for a real estate market, and something's going to give. Now, if I jump over to the Florida condo market, we're going to see kind of a comparable in scenario. Percent change in terms of cash buyers, 161%. Median sales price increased 21%. Average sale price increased almost 40% from last year to this year, quarter two. It's just astonishing how high values have gotten. If we scroll down back to new listings, up 27%, which I think we're going to see more and more of that. We'll talk more on that. And then month supply of inventory, 1.7 months of inventory. Again, single family homes was 1.1. I just think it's not good that our real estate market is in this predicament right now, Florida as well as on a national level. Now, let's talk about it for a second. Despite what you see on a lot of news, and it's still saying that millennials are basically a big rush to the market and they're buying like crazy. And you know what? I think that some of that information is skewed. Now, if we look here on Fannie Mae's website, right around April of this year, basically we start to see an uptick of people basically stating that they believe it's a bad time to buy a property, to buy a home. And as you can see, basically it's got it broken down into 4 different age groups, and age 18 to 34, 35 to 44, 45 to 64, and 65 up. They're all going up pretty much on the same straight line, going up in terms of the basically percentage of people that think it is a bad time to buy a home. I don't think people are stupid. I think that they understand that the real estate values are very high. I think that they understand that maybe if they buy a property, they're not going to be in that home for the forever home, and they're not going to be there for maybe longer than 3 or 5 years. And if 3 or 5 years down the road the market corrects, which I anticipate it will do, are they going to be upside down, or are they going to be stuck in that home? So I think this is a lot of information that people are starting to think about and starting to talk about. So I think buyer confidence is basically reducing, and I think that we're going to have less buyers in our market coming into Q3, Q4, as well as Q1 of 2022. Also, I did another video on Black Knight, and they estimate roughly in September and October about 18,000 people per day are going to be exiting forbearance. And I think that in my experience in the last real estate recession, dealing with short sales and people trying to get loan modifications and everything else, it was a goddamn mess. And I think that we're going to see that again. I think the banks and servicers are going to be completely overwhelmed, and a lot of people are going to get freaking frustrated because they're not able to basically do a loan modification easily. They're going to have to submit additional paperwork. They're going to have to go through this process. And I think people are going to get fed up. They're going to look at their equity position, seeing that they are in a very high equity position right now. And I think we're going to see more inventory come to market because of that reason, because that they are able to cash out in a good equity position. I think also distressed landlords are going to add to the inventory coming into the next 2 quarters as well, especially with the eviction moratorium lapsing. And, I think Biden can try to extend it again another whatever amount of time, but I think he will just get smashed. And hopefully it doesn't get extended, because we need our real estate market to start cycling through its natural cycle. And distressed landlords are really being hit. You have people that haven't been paying their rent for the last 18 months. And it is stated that a lot of these landlords are going to sell at least one of their properties. And according to the National Apartment Association, estimates that mom and pop landlords own about 22.1 million rental properties in the United States. And I just think that there's, a certain amount of landlords, let's say if a landlord owns 5 properties, they might see their equity position being pretty high, and they're looking at it like, wow, I could use that $30,000, $40,000, $50,000 from one property to cash out to kind of cover those expenses because of my other properties or other tenants not paying. So I think we're going to see more inventory come to market because of distressed landlords. And also, I think we're going to see more inventory come to market because of individuals like myself. This condo I'm in right now, I'm in contract to sell this one. I'm in contract to sell my Fort Lauderdale condo. And I think that more and more people are going to start to realize that the real estate market cannot go up forever, and people are going to cash out. And temporarily, you might have to sacrifice and rent a property and even pay exuberant amount of money for rent right now, maybe for the next 12 months. But I think people are going to see opportunity where they can cash out and maybe even downsize. Even my sister, she recently sold her house and actually downsized into a townhome and put herself into a way better equity position on that, and freed up a bunch of cash where she's going to have a good amount of cash to basically go and buy distressed assets when the real estate market does correct. Our merch line hit, man. I'm super proud of it. I'm super excited for it too. If you guys want to support this channel, I got these cups, I got shirts, and basically they say invested. I think it's important that we always remind ourselves to continually invest in ourselves, continually invest in real estate and assets. And I've fallen off the wagon. I've been there where I bought stupid shit and I've bought liabilities that I shouldn't have. And it does take a lot to be disciplined and continually to invest. And it takes that reminder, and that's why I wanted to have something that is meaningful to me, that I see every day, whether it's on a shirt or a cup or whatever the case is, that is always reminding me to stay invested, because the long run, things are going to look really, really good if I'm continually investing in myself as well as investing in assets and not liabilities. As always, I appreciate you guys being here. Check out that next video if you haven't checked it out already, on 18,000 people exiting forbearance, and I'll see you guys there. Thanks a lot.